Great to see everybody here today. If you're new to trading, this is the video you need to watch. Today, I'm going to cover everything as quickly as possible. If you have any questions, leave me a comment below, or you can also reach out to me by email, and you can find that on my channel. I'll also leave some chapters in the description so you can find any part of this video that you want to go back to. Now let's get into this. Understanding the basics of trading. Trading is an act of converting market demand into market supply. The goal of trading is to increase the amount of money you can afford to buy and sell. It's a process of finding the best price with the potential of making a profit. I think this is self-explanatory. You're simply buying and selling with an attempt to make a profit. What are the different types of trading? Today we're going to cover 5 different ways. The first one is scalping. Scalpers, well, this is a particular type of method in which traders try to make a small profit off of many trades rather than trying to make one large profit off of one trade. Day traders. Day trading is a way of buying and selling currencies in which all positions are opened and closed within the same day. Day traders typically hold their position for minutes or hours rather than days or weeks. Swing traders. Swing trading is a type of trading that involves taking trades that last a couple of days up to several months in order to profit from an anticipated price move. Position traders. These are the type of traders who hold their trades for the longest time. Their trades can last for several months to several years. Then we have algorithmic trading. These type of traders use a computer program to trade based on a predetermined set of rules. The benefits of using algorithmic trading are the ability to trade rapidly and frequently and remove any trader emotion from the equation. What are the benefits of trading in the first place? Generate income from home. I think that's a pretty good reason by itself. Trade from anywhere around the world. So anywhere there's an internet connection, you can trade. So it doesn't matter if you're visiting family or you're on vacation or on a business trip. As long as there's an internet connection, you can trade. You can trade 24 hours a day. Because the market is open 24 hours a day, this allows you to trade from anywhere in the world. It doesn't matter what your work schedule is. You can trade during the time you're available to do so. You also have access to free resources to educate yourself. You're not restricted from educating yourself. There's lots of great options you can easily have access to. You can find both free and paid options. And then there's leverage. Using leverage allows you to trade a larger position to potentially maximize your return. However, this can also magnify your losses. Brokers generally require margin as an insurance policy, and the amount will depend on how much leverage they gave you. What are the risks of trading? Small market movements can have a big impact, high risk, and possibly complete loss of investment. So as we mentioned, leverage can magnify any wins or losses from the trades you take. You need to psychologically prepare yourself for either situation. Most people can handle winning, but what separates you from everyone else is how you respond to your losses. How do you begin trading? Well, it's simple. You need to educate yourself to make sure you know what you're doing first, and then you open up a trading account. So before you start, you need to make sure you have a solid foundation in your understanding of how to trade. Once you're ready, you can find any broker you're comfortable trading with. You will be likely using MT4 or MT5 to trade, but some brokers have other options. You can see one of the popular methods here is YouTube. YouTube offers a lot of great resources. You can find valuable content on there when you're first starting out learning about trading. And when I was first starting to learn about Forex, I was reading everything I could get from the library. The library offered an interlibrary loan system where it covered the entire province for me. So all the libraries were connected, and if there was any books I was interested in reading, they would send it to my local library. They'd give me a couple weeks to read it and I could return it. So that was very valuable. And then I also bought books off of Amazon and such, but just the library alone and YouTube can give you plenty of information. So great place to start. Develop a trading plan. What are your goals for trading? Becoming a successful trader, financial freedom, helping others. These are all good goals. Financial freedom, I know most of us would like that. Helping others, well, this is one of the benefits of doing well. If you become a successful trader, you might be able to help people in ways that you couldn't have before. Now, what kind of analysis do you need to make a trade? There's technical analysis and there's fundamental analysis. Some people use both, and we'll talk about that in a little further on. What are your risk management principles? Never risk more than you can afford to lose. Stick to your trading plan. Always use take profit and stop loss. If you end up taking risks, you could end up losing everything. What are your stop losses? A stop loss order helps you limit your risk on a trade. Make sure you have a clear idea on where you plan to place it. What are your take profit targets? You should know where your profit target is going to be before placing the trade. What are your contingency plans? You need to know what you're going to do when your trading doesn't go as planned. And your trading will not go as planned all the time. So you need to anticipate such moves and know what to do in that situation. How often should you trade? This will depend on what type of trader you are. If you are trading currencies on a lower time frame, it's not uncommon to have multiple trades each day. The number of pairs you are watching and the strategy you are using will also be a factor in how many opportunities you will get. Do you have a financial plan in place in case of loss? Never risk more than you can afford to lose. Staying disciplined and focused. Do you have a financial plan in place in case of loss? And as we mentioned before, and this is such an important part that it keeps getting brought up. Never risk more than you can afford to lose. Too many people end up risking too much and ends up resulting in total loss. Identify the key reasons why you want to be disciplined when trading. Assign specific tasks that you need to be completed in order to stay disciplined when trading. Make a schedule for when you will complete your tasks. Use technical analysis. What are some common uses of technical analysis in trading? Well, you can draw support and resistance levels, identify the current trend, and refining entry and exit points. What is the difference between technical analysis and fundamental analysis? Technical analysis is the study of past price changes to try to predict future market movements. This is done by looking for patterns, using previous data and indicators, and other tools. One way to analyze the foreign exchange market is through fundamental analysis, which looks at economic, social, and political factors that could impact currency prices. What are some common techniques used in technical analysis? Chart patterns, support and resistance levels, supply and demand, volume, moving averages, MACD, RSI. Practice and improve your skills. What are the benefits of practicing trading? Trading with a demo account allows you to practice without any risk of your own money. Helps identify mistakes that you would have made with a real account. How can you improve your trading skills? You can start recording your data, so keeping track of everything in a journal. You can purchase trading software. I found this incredibly valuable. The basic plan with TradingView. There's other companies out there, but this is the one that I use. And I just have the basic plan. What the feature was that I liked the most about it was the bar replay tool. So when you're backtesting software, when you're backtesting your strategy, this will help speed up the process. Before that, I used to use MT4 for everything. I found that just incredibly painful. So if you try using TradingView and the basic plan, I'm sure you'll enjoy it just as much as I did, but that'll be for you to decide. Of course, practice, practice, practice. You need the chart time because you can be told how to trade, but no two people are going to trade the same. So you need to put the time in, and this will help iron out a lot of the issues that you're going to run into. You need to follow your own rules. It sounds simple enough, having a set of rules and following it, but most people can't follow them. Lots of people will bend the rules as easily as possible. You'll find ways to eliminate things from your trading when you're back testing, maybe saying, oh, I wouldn't have taken this trade or I would have taken that trade. You have to be strict with this. Otherwise, you're not going to be able to properly back test and forward test anything. Find someone who can teach you an easy to understand way of trading. There's a lot of traders out there that when they talk about stuff, it doesn't matter how much time you put in watching their videos, you seem to be more confused and you can't seem to apply it to the market. Find someone that can give you concepts that you can practice, that you understand without any issues, and can develop further from that. On my channel, I teach people how to trade using simple methods, and if that's something you're interested in, I'd be happy to share them with you. What are some common mistakes traders make? Risking too much when trading. Most traders shouldn't be risking more than 2%. Lots of times you will see traders trade from 0.5 to 1%. And if you decide to trade for a prop firm, well, that number may even want to be lower, because what's going to happen is there'll come a time when you're going to suffer several losses. And depending on how much you risk, that can determine if you're still going to be trading for a company or if you still have the capital to trade in your own account. Depending on the amount of leverage you have, you may decide to risk more than you're willing, than you should be risking. So risking too much can be a big problem. Make sure that you have your risk management properly set before trading. No stop loss. This is another one that I hear all the time from prop firm companies, talking about how the majority of people that take their trades, that take their challenges, end up losing the challenge because their trade went against them and they didn't have a stop loss to protect themselves. This doesn't make any sense to me. Stop losses are like an insurance policy. So if you keep those, you can prevent yourself from taking unexpected losses. Breaking or bending rules. We talked about this just a few moments ago. If you break or bend any of your rules, there's no point of even following the rule at that point. You have to treat this like a business. You can't show any flexibility when it comes to this, because if you do, you're going to have to write that in there. And if you're not willing to write that in as a rule, then don't be doing it. Ignoring longer time frames. So when you're trading, what I usually talk about on my channel is marking your areas up on a higher time frame and taking an entry on a lower one. And why would you do this? This can allow you to come up with a bias on the direction that it may be going, because what you're doing is you're looking for areas where price may react before getting in on the trade. So you're taking a look at the bigger picture, which is the higher time frame, and then you're getting in on the lower time frame if you see an entry pattern, and trying to target your predetermined length. Emotional trading. This can be a big problem, and I guess we could group this in with revenge trading as well. You don't want to be trading when you don't have a clear head. If you're sitting down at the computer already stressed, struggling with financial issues, need to pay the bills, make money off of trading quickly, or you're upset because you've lost some trades and now you want to trade, you're looking for opportunities that don't exist. You're creating new trading opportunities that you shouldn't even have been touching. And you'll notice this later on, and you're going to regret that you did it. So avoid it completely. Again, not using a journal. The reason that you need this is because this is going to give you the opportunity to take a bigger look. You're going to be able to step back and see stuff that you didn't notice before. You might notice the time of the day where you're most successful at trading. Maybe there's a certain pair that you do really well on, and there's one that you've never been profitable on, so you might eliminate it completely. There's a lot of different things. You might notice that your stop loss, if it was just a little further out, maybe it'll help increase your win rate. There's so many ways to look at this, but those are some of the things that you can look at. Learning to accept losses. This isn't an easy one, but you need to get through this before you start trading on a live account. Now, I know FTMO has their 2-week demo challenge account. And when you do that, I'd say that's the closest thing that you could possibly get to without trading live funds. And you can hold yourself accountable with that. And what you're doing is you're evaluating everything. You're you're going to start understanding that, okay, I'm trading 1, 2, 3, 4 pairs. And when I do that, and after testing this for a very long time, you'll start generating enough data where you could say, okay, I know it's expected to have this many losses trading this many pairs. So then, depending on if you're trading for your own personal account or if you're trading for a prop firm, you'll have to adjust the amount of risk that you have on your account, because you're going to have to anticipate this when you're trading with live funds, because you already know that it's happened in the past. So you have an idea on what to expect going forward. What are some tips for practicing and trading? Always follow a trading plan, study the markets, treat trading like a business. The more you take this serious, the better chance you have at doing well at this. Reduce the number of assets you are watching. So like I mentioned, if you're watching a bunch of pairs, the problem with that is what happens when you take a bunch of losses. Now, if you're just trading one pair, maybe from time and again, suffer 3, 4, 5 losses in a row before you start getting your wins again and becoming profitable. And that's fine for one pair. But what happens if you're watching 3 or 4 pairs and over those next couple weeks, they're all suffering losses? They're all profitable on their own at long term, but during that short time, they were all suffering losses. And how are you going to be able to handle that? Now, if you're in a prop firm, there's a good chance that you'd already blown your account unless your risk is incredibly small. What else can we do? We can simplify our trading. This is an incredible way to get your foot in the door on this. And that's what I do, is simplify trading, where I use no indicators or very little if I ever do. And I'm marking my area off on a higher time frame and taking entry on a lower time frame. And you will notice that once you start working on this, things will start improving for you. And finally, stay positive, and you have to believe in your ability to succeed. Remain disciplined in your trading and always focus on the long-term potential of your investment. Be patient in the market and do not overextend yourself. So manage your risk. Remember that the markets will often go through cycles, and there will be times when you will lose money. However, with a consistent approach and a positive attitude, you will be able to weather the storm and improve your odds of being a successful trader. I wish you all good luck. And if you have any questions, leave me a comment. And until next time, bye for now.